Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Well, as usual, we will talk about the euro currency and start from the daily time frame. In general, we can see that our yesterday's trading plan has worked nice, since we said that market could proceed a bit lower to hit the target on the daily time frame of that target 128.84 from that pattern A, B, C top 1618 extension right here. Second, because market not quite has reached the 127 extension of that swing from that low to that high. This is our second butterfly in a row. This is the first one that is the second. We yesterday said that since market not quite reached that area, probably it could proceed a bit lower to hit it, and only after that will turn to some retracement. So that has happened. Market has hit that area, so around 128.60, and now shows some retracement to the upside. The major question now is, will market proceed a bit lower to the 128 area or not? This kind of situation is very perfect almost perfect for the market makers, because they like some indecisive situation on the markets, because from the one point of view, market has accomplished 127 extension butterfly. So the butterfly is a reversal pattern, and those who will take that signal will enter on the long side of the market. Besides, you can see that trend now holds bullish, although price action doesn't quite support it. Also, you can see that this is some kind of stop grabber that has appeared in that area. So you can see that market has tried to shift trend bearish, but couldn't do that, and returns right back. This is the stop grabber pattern that suggests the taking out of that high. But very often happens that in such kind of environment that stop grabbers failed, because if you will take at the weekly time frame, you'll see that this swing to the downside is the CD leg of the greater ABCD pattern, and the target of that ABCD pattern stands slightly lower than the current market. And from that perspective, market still could proceed a bit lower. And as my experience suggests, it's very often happens that market usually in such kind of indecisive area shows deep pullback first to enter, to grab the positions of those who enter by that pattern, and later returns right back to grab their stops, achieve the greater ABCD target or some other pattern, but in our case this is ABCD, and only after that will start the retracement that we expect on the daily time frame. So in fact, this is very difficult to predict the precise price action in such environment where so much traps could appear in this area. That's why we should be very close, pay much attention to the intraday charts, and be very sensitive to any clues or any patterns that could be formed in that area. This is very important. Well, let's take a look on the 4-hour time frame. On the 4-hour time frame, we see this pullback since market has hit this target that we have discussed yesterday, A, B, C top 129.14. Also, you can see market has hit the 127 extension of the butterfly on the daily time frame. Our discussion yesterday we have started from that bar, from that hammer pattern. You can see also that 4-hour time frame has turned bullish. The potential areas of retracement that we said, the first one has achieved already. This is the first resistance, fib resistance, and the low of the butterfly pattern, initial swing of the butterfly, 129.65. The next area that is possible is 130, roughly confidence resistance, and the next area 130.88. But this seems a bit deeper to me. I prefer to see that retracement will stop in that area, because this is also the 50% resistance of the thrusting bar, and market should not return deep inside the butterfly pattern. If it will happen, the market will proceed higher, then probably this will work as a reversal pattern, and probably market hardly will continue move to the downside. Well, from the perspective of the bears, the retracement just to that area is preferable. On the hourly time frame, we see that we have the pattern that we have discussed yesterday, and say assumption that probably it will be it. So consider this the three drive, nice three drive buy pattern. This is the first drive retracement. The second drive stands at 1618 extension of the third one, and the third drive stands almost as 1618 extension. Just some pips doesn't quite reach 1618 extension, but that happens sometime. Also, you can see the nice bullish divergence that very often coincides with the appearance of three drive buy. The minimum target of this pattern is the high between the second bottom and third bottom. It's right here. So we can see that market has taken out. What we could expect? Take a look that this swing to the upside is a bit greater than this swing to the downside, the recent swing. This points on some short-term reversal on the market and tells us that probably retracement could be a bit deeper. For our hourly time frame holds bullish. What we could get here? This probably could appear as the Gartley's 222 buy pattern on the hourly time frame. This is the initial swing. Now we could see some ABCD retracement, and probably retracement will be deep, at least to the 129.11, since this is the first swing to the upside of the solid move to the downside. Usually when that situation appears, this market shows deeper retracement. If this will be the case, then we could expect the greater A, B, C bottom, D retracement. The target of this retracement will be right around the confluence resistance. This will be confluence resistance on the hourly time frame and agreement. So that will be a nice area to search for the potential sell signals in that area, since market could proceed lower to the 128.30 area, because now major targets on the daily time frame stands below the current market. So I think that this swing low will not hold and market will renew it. That is overall, this situation, as you can understand, is very tricky, because this is really a trap for those who try to enter on the long side of the market right now and think that reversal is already has started. But very often this is not the case. So be extra careful if you would like to enter on the long side of the market. Use tight stop and be extra careful taking out of that loss. Or if you still intend to enter on the long side of the market, it's better to place stop even below 128, although it's not very close to current market. So just be careful, because this is really tricky situation. Market makers very like that situations when from the one point of view market has hit some significant target. From the another point of view, some more significant target stands right below the low and suggests that market could proceed even lower. And when the market starts to show retracement, well, usually this retracement just trigger the position of the traders who enter on the long side of the market, and later market returns back, take out that loss, take out the stops of those who enter on the short side, on the long side of the market. So this is really tricky. Be extra careful. That's our current situation on the market. Well, that's been said. In the near term, probably market will show retracement to the 129.11 at minimum. Then probably could show retracement, some ABCD move as far as to 130 area. But we couldn't exclude even if market will just continue move to the downside to the 128. That's also possible. That's why it's very, say, dangerous to enter on the long side of the market in such kind of environment when significant target stands right below that low. But at the same time, the retracement probably could come when the market will hit significant targets on the daily time frame. That's just the question of the time. So good luck to you. Control your risk and wait for the clear patterns that will give you sufficient confidence to enter on the market on any side.